What's good, guys? You're welcome back to another video. So in this video, I'm just gonna be breaking down gold for you guys, how I was able to take a super trade on gold. It was really slightly different from my setup that I always use, but this is also one of the best setups you can use for yourself. So make sure to like this video, make sure to comment, make sure to like to help YouTube algorithm on my videos. You understand? Make sure to comment in the comment box and let me know what you think. Make sure you like and make sure you comment once again. So let me start off from the daily time frame. As we all know, gold is a pair that is very volatile in the market. One of the pairs that is very volatile in the market. So when trading gold, you have to be extra careful. Being extra careful with gold. So let's start off from the daily time frame. So from the daily time frame, we all know that gold has been bullish since the beginning of this year. Gold has been bullish and gold keep pushing to the upside. So basically on the higher time frame is saying gold is pushing to the upside. So probably all on a percentage level, we will taking 70% trade on the buys, because the whole structure is saying gold is on a buy race now. But that does not mean that we are not gonna take any sales on gold when it presents itself. But one thing you have to put in mind that when a chart or a setup is moving bullish on the higher time frame, this simply means most of your trade should be buys, because the higher time frame moves with buys, and with that buys it's gonna move very long for a while before it start dropping down. But when you are taking a sell in a bullish market, that means the sales are not going to stand. So you have to be a little bit quick, take your profit out of the market, then you move on, cause in a bullish market will just retrace, because we all know market just trend for a 40% of the time and then retrace 60% most of the time. That's how market is. So you just want to capitalize on the retracement. Just make sure you are very quick on it and then you move on. So on this gold trade, I was able to take some sales on it in a bullish market, but I was very quick and clinical on my sales. So now on the daily time frame, price has been moving bullish. As you can see, price has been moving bullish to the upside. Now let's move on to the 4-hour time frame. And on the 4-hour time frame, I was able to spot that price has been gaining a support at this level. Price gaining support at this level before this impulsive move to the upside. Let me adjust it. Price gaining support at this level before an impulsive move to the upside. You can see price break this resistance right here. Price break this resistance right here and then push all the way up to this level. Now price has reached this region, this support region, this resistance region, and now on the 4-hour time frame, price has been rejecting to the downside. So price rejected this resistance level and then pushed all the way to the downside, but it did not touch our support zone or level here for the second time. So we didn't initiate any trade because we want our support to be touched, give us a correct rejection, and then a push to the upside, giving us a confirmation, and that's when we are going to get into the market. It didn't touch it, so I didn't worry myself executing any trade on this because simply because it didn't touch my support level or zone. Now price touched here from the resistance level, and the resistance level simply means now here this resistance is the highest point price reached before retracing to the downside. This is the highest point price reached before retracing to the downside. Now so here being the highest level price reached before retracing to the downside, that simply means when price retested this resistance region, possibility of it dropping down is higher because because on the support region we buy and on the resistance region we also sell. So you can see on the higher time frame like the 4 hour time frame, price rejected at this point and push all the way to the downside and now retesting it once again, and because it is a higher time frame, that's why it is highly anticipated that price may fall. If price may fall, we will get to know because there will be a rejection candle presenting to us that price want to resist or reject the resistance level and push a little bit to the downside. So on the 1 hour time frame, I did something that I really want to show you. On the 1 hour time frame, I did something that I really want to show you so that you get to know how you can also trade this type of setups when it presents itself. You can see from the 1 hour time frame as price, let me clear this one first. When price retested, when price created this highest point on gold in the market and it started dropping all the way to the downside. Price started dropping all the way to the downside because it has resist or price was not able to pass this highest level that it has currently created or reached and now drop all the way to the downside. This resistance line or zone is simply placed. I just placed this resistance line here because when I want price to retest this resistance line or zone again, then I'll be waiting to sell. Now you can see I have some box right here, a box right here. All what was happening here was simply a manipulation in the market. All what was happening here was simply a manipulation in the market. So I was waiting for price to keep rejecting and rejecting and rejecting and rejecting till it came back or it come back into my resistance zone or level, then I will execute my trade. Now after the manipulation, price move inside my resistance zone or level where I wanted to execute my trade. So because one price moved inside and also closed inside my resistance zone or level, price also closed inside my resistance zone or level, so that give me an edge that I will go in for a quick sell in the market and then take my profit out of the market. So I moved on to the 30 minutes time frame to get a little bit pullback, then I will enter my sell right at that point. So you can see after the close, the 30 minutes close of this bearish candle right here, after the 30 minutes close of this bearish candle right here, and the next 30 minutes candle, it was a pullback, a little bit of pullback. Then I begin to enter the market right at this point. I enter like 5 or 4 position. I might show it up here and then leave my trade all the way to the next support region or level. To the next support or region level. My stop loss was a 30 pip stop loss, and then my TP was so this trade was like a 1 to 3 or 1 to 4 risk to reward. So I was able to get some profit out of the market very quickly. You can see price to push all the way to the downside, but I said no, this market is a bullish market. I have to take my profit very quick and then stay out of the market. So this is basically how I was able to see this trade coming. I was able to enter how my thought process was it. So if you like this type of videos that I've been creating, please once again subscribe to the channel, like the video, and then see you in the next video. Bye guys.